I like Bitcoin. I think Bitcoin is suffering from gold envy right now.
Yes.
And that liquidation event, gold's been a great asset, now at over 30 trillion. But I think, again, Bitcoin is a genuine store of value. It is supply limited. So I think in next year is really when Bitcoin can sort of begin to recover, and the 200,000 level makes a lot of sense to me.
Tom Lee begins by reframing the October 10th sell-off as a liquidation event, not a collapse in fundamentals. That distinction is critical. In his view, what happened in crypto closely resembles what occurred in 2022 after the FTX implosion. Not in terms of fraud or systemic rot, but in terms of forced selling, deleveraging, and market maker dislocation. When large liquidations occur, especially in relatively thin or leverage-heavy markets like crypto, prices can detach from fundamentals for weeks or even months. Lee emphasizes that in 2022, it took approximately 8 weeks for markets and liquidity providers to regain their footing. Market makers pulled back, bid-ask spreads widened, volatility surged, and price discovery temporarily broke down. What we're seeing now, he argues, follows the same mechanical pattern. Importantly, this kind of event does not invalidate the long-term thesis. Instead, it represents a reset of positioning. Excess leverage is flushed out, weaker hands are forced to sell, and markets eventually stabilize on stronger footing. From this perspective, the recent divergence between crypto, gold, and equities is not a sign that crypto is broken, but rather that it's still working through the aftershocks of a liquidity shock.
Crypto was having a good year in 2025 until October 10th, and suddenly the paths of crypto and gold and risk assets diverged. I think as we look back at that moment, there was a liquidation event that was similar to 2022 when FTX collapsed. So it took 8 weeks for markets and market makers to sort of recover and markets to begin to find their bearing. I think that's what's happening now. The outlook for crypto is still really good for the next 5 to 10 years. I don't want to overuse the word super cycle, but we know that Wall Street wants to tokenize everything, whether that's Vlad at Robinhood or Larry Fink at BlackRock. And that's going to bring a lot of efficiencies to Wall Street, but it really brings the use case forward for something like Ethereum. So we're pretty bullish. I think Ethereum, which is around 3,000, can easily get to 9,000, 7,000 in early 2026. And then over time, as it starts to be competitive with payment rails, could get to the 20,000 level. So I'm pretty bullish. I like Bitcoin. I think Bitcoin is suffering from gold envy right now.
Yes.
And that liquidation event, gold's been a great asset, now at over 30 trillion. But I think, again, Bitcoin is a genuine store of value. It is supply limited. So I think in next year is really when Bitcoin can sort of begin to recover, and the 200,000 level makes a lot of sense to me.
I want to run through some of your picks, and Steve can take this over. We need to go with it. NVIDIA, top 5 idea, AMD, Meta, Goldman, Ariston Networks. Your bottom 5, is that names you guys disfavor, or they're just the second half of the top 5 list? Yeah,
it's our core research core list of stocks we like, but the bottom 5 are the ones that maybe myself or our technician Mark Newton don't think are as timely. So they're
CrowdStrike,
naughty, but not like sells.
Okay, they're not. CrowdStrike, Costco, Palo Alto, Tesla is on that list. What is your message to the Tesla bulls? And Willis Towers Watson, but go ahead.
Yeah, I think Tesla has been on this research list since 2019, so we would never sell Tesla because Elon Musk, there's so much future present value created from a lot of his ideas, whether it's going to be Optimus Prime or robotaxis or XAI. But in the near term, Tesla's had a huge move recently, so I think it is just a question of consolidating those gains.
Tom, when you talk about the top 5, it's diverse industry-wise. Is there any particular industry that you like more than others, as opposed to just the individual stocks?
When I think of 2026, I still like tech for next year, but I do think it is ISM sensitive and interest rate sensitive and dovish Fed sensitive. So it's also financials, industrials, energy, and basic materials.
So the Fed probabilities, when I look at them for next year, I got nothing happening in January, not so much happening in March, maybe April, more likely June. What's your take on the importance of that to the market?
I mean, that timeline makes sense because I think until the second half of next year, we're going to have a Powell as the Fed chair.
Yeah.
And from that nomination to confirmation window, I mean, you'd have a better sense. That's really when I think the market starts to price in a more dovish Fed. So it makes sense to me that the first half is as a market that's legacy pricing Fed Chair Powell and monetary policy.
And you're sticking with the Mag 7.
Yeah, I still like Mag 7.
Ben Cowan begins by asking the right question. Not where Bitcoin is going next week, but what type of market structure we're actually in. At first glance, some people compare the current setup to 2022, a higher high, followed by a bleed down, a rally attempt, and then another drop. In 2022, Bitcoin topped euphorically, collapsed violently, briefly rallied, and then entered a prolonged bear market. But Cowan is clear. He does not believe the current market is following the 2022 template. Why? Because 2022 came after a euphoric top. Retail participation was massive, social interest was extreme, leverage was everywhere, and when the unwind came, it was fast and brutal. This cycle is different.
Bitcoin, in terms of the current market structure right now, you could say, is it like 2020? Is it like what it looked like going into 2022 or going into 2018 or 2014? In a sense, yes, right? I mean, here's the 2022 top. High, higher high, bleed down, rally back up, and then drop. If it's playing out like 2022, which I don't really think it is, to be honest. If it is, then we basically still have this rally to the bull market support band ahead of us, and we're kind of in this phase right here. I don't think we're following that right now. I don't. One of the reasons why I don't is because in this one, we were coming off of a euphoric top. This is the social interest for Bitcoin. So it's Bitcoin price color-coded by social interest. We were coming off a euphoric top, like 2017, like 2021. This one is an apathetic top. It's more like 2019. So when we look at the bear markets of 2014 and 2018 and 2022, well, first of all, you can see that this cycle lasted the same length as the last two cycles with diminishing returns. And interestingly enough, every cycle, a lot of people are like, oh, this is when diminishing returns will die. I don't think so, right? I think it's still going to go on. I think eventually it will, but only after some like big macroeconomic event causes Bitcoin to do something in a cycle that it doesn't normally do, where it like goes down when it normally doesn't. And maybe that's this year, because technically this year, Bitcoin, what has been red. So maybe if we can get if 2025 is red and 2026 is red, which is kind of my base case, then perhaps next cycle something different happens because it had a longer period to consolidate. But when you look at a chart like this and you're like, all right, well, if the top is in, then we have to consider the bear market possibility, right? And if you look at the RLI after the cycle peak, I don't really know that this is tracking the prior bear markets, right? I mean, like, let's go one by one. There's one bear market that it's tracking, but it's not any of these. If you look at this bear market peak 2, right? Like, we didn't really get that massive drop and then it bounced back up. Why? Because we topped on apathy. The next cycle, we had this massive drop and then it bounced back up. Why didn't we get that? Because we topped on apathy, not euphoria. Last cycle even, we had this larger drop around this time. It would have started a few days ago. We didn't get it. Why not? Because we topped on apathy rather than euphoria. So what we have to look at is the only other time in history where Bitcoin topped on apathy rather than euphoria. And again, the reason for that is because of monetary policy, right? And you looking at social interest, seeing that we topped out on apathy, seeing that it's not like 2021, it's not like 2017, it's like 2019. Remember, back then, Bitcoin found a top 2 months before the balance sheet of the Fed started to go up, right? Same thing is happening now. You could argue that the balance sheet of the Fed is going to start going up in 2026, just like it started going up over here. And then while it did that, a lot of people are confused. They're like, well, if the balance sheet is going to start going up, why is Bitcoin bleeding? Well, I don't know. Like, why did it bleed in 2019 when the balance sheet was going up? Probably because the markets are forward looking. And if you wait until the robins are here, spring is over. So arguably, we are in this phase right now where we're bleeding as we topped on apathy. There's not enough new participants coming into the market to care. And when that happens, you top on apathy. But when you top on apathy rather than euphoria, you get a bear market that doesn't look like a panic riddled bear market where people are capitulating and Bitcoin drops like 50% within the first few weeks. You get a bear market that looks like the 2019 bear market, where it's just a slow bleed and people get frustrated and they're like, what is going on? Why are people selling? You know, it's like, how can you sell when there wasn't a euphoria phase? It's like, if you look at the Pi cycle top indicator, that didn't trigger. If you look at the terminal price, like that didn't trigger. Like none of the stuff triggered. So why are people upset that people are selling? But what you're experiencing, what a lot of people are experiencing, is time-based capitulation, right? They're just tired of sitting around watching Bitcoin bleed. And you can't blame them. I mean, look at the valuation of Bitcoin against silver. It's just falling off a cliff. So what happens is people see this, they then trade in their Bitcoin for something else because the other things that are moving are doing much better. That's what's happening, right? So what you're experiencing right now in the market, in my opinion, is time-based capitulation, which is kind of how it played out in the 2019 bear market, where it was a slow grind down. Now, the hard part right now is obviously predicting short-term price action, and I can't do that, right? I'm not great at predicting short-term price action. I equate short-term price action as a random walk akin to geometric Brownian motion for any of the people studying physics. So it's not really a predictable thing. When you look at 2022 on that first drop, the bounce was a pretty nice bounce, right? We rallied over those 3 weeks about 40%. This bounce here, 15%. Huh. Is that just because of diminishing returns and diminishing losses? I don't think so. What happened in 2019 after that initial drop? How far did it rally before dropping back down? About 14%. And then what happened is Bitcoin then swept the low from before that final rally began. And then after sweeping that low, it then rallied to the bull market support band. So there's part of me that wonders if that's how it's going to play out, where Bitcoin simply sweeps the low from April of 2025. Where perhaps the path is something like this, and then back up, and then something like that. I could see it playing out like that. But I've already made all the trades I'm going to make, right? I told you guys, you know, back in October, the peak for Bitcoin was likely in Q4. And I've always said that. I've been pretty steadfast about that. Q4 of the post-halving year is when the top is in. So what I could see happening is I think there will be a counter-trend rally back up, but I don't think it's going to happen this year, right? Obviously, I mean, I've been saying, I know it sounds silly to say that now, it's already December 28th, but I've been saying that for weeks, right? Like, I don't think it's going to happen this year. I think it's going to happen next year. Now, I wonder if people are waiting for 2026 to see if something changes, and if it doesn't change, maybe you get that quick wick down and then a rally back up and then kind of consolidate back down. That's essentially what happened in 2019. Something like that is where it kind of went down, back up, and then back down. You can see it. And on that drop down, it was just a wick and then straight back up. So I don't know if it's going to play out like that. At this point, I've already made my portfolio how I want it to be for what I think is the Bitcoin bear market, right? Like, I'm not going to go panic sell now or panic buy or anything like that. If Bitcoin does come down here, like, maybe that'll offer some attractive opportunities. I just know that historically, if you do believe this is more like the 2022 bear market or the 2018 bear market, what you'll notice is that even when the bear market is confirmed, you still typically get that rally to the 50-week moving average at some point, and that's currently at around 102,000, a little bit less than 102K. Note, there's no such thing as a sure thing. We did not get the rally to the 50-week in 2014, right? It did not happen. But the counterpoint is we didn't even fall below the 50-week back then until August, right? And that was already, the bear market was already halfway over by that point. So I kind of think that we will have a rally to the bull market support band, but I don't think it's going to happen until 2026. And I think there's decent odds that it doesn't happen until after we go, maybe we like wick back down one more time and then rally.
When you put Tom Lee and Ben Cowan together, the message becomes clear. Short-term price action is being driven by fatigue and tight liquidity, not broken fundamentals. What feels like weakness may simply be time-based capitulation, the market testing patience rather than conviction. At the same time, long-term forces are still moving forward. Institutions are building, tokenization is coming, and crypto's role in the financial system continues to expand quietly beneath the surface. This phase isn't about hype, it's about positioning. Markets don't reward emotion, they reward understanding where you are in the cycle. Stay disciplined, stay patient, and we'll see you in the next one.